You live in Europe and thinking about buying ETFs to invest your money wisely without the hassle to constantly look at the market. Let's find out what are the best ETFs and why. And also, if you like the content, don't forget to hit the subscribe button. My name is Daniel. Let's crack on. If you want to have the best ETFs for yourself, I would suggest to have a criteria, aka a list of the features that are most important to you. I will share with you mine, and at the end I'll also give you some specific examples. My first point on this list is the cost of the product. Low cost is a particularly critical factor for European ETFs because it directly impacts the overall return of your investment. ETFs are often praised for their cost efficiency compared to other investment vehicles like mutual funds, and this advantage is even more pronounced in Europe, where market returns can vary significantly across different countries and different sectors. Low costs, primarily in the form of lower expense ratios, mean that more of the investor's money, aka your money, is working in the market rather than being absorbed by different kind of fees. So if you earn 10% in a year, but you have to give away 2% just because you found an expensive product, that significantly lowers your investment returns in the long term. So if I tell you that you can buy a glass of water from me for €2 and you can buy the exact same glass of water from me for €3, which one would you choose? Of course, you would go for the cheaper option. So make sure when you choose a glass of water, opt for the cheaper one. And also when you choose investment products, go for the cheaper option. My second point is liquidity. Liquidity and large market capitalization are crucial factors for European ETFs for several reasons. High liquidity in an ETF means that shares can be bought and sold easily without significantly affecting the price, which is particularly important if you need to enter or exit a position quickly. This liquidity ensures that the ETF can handle large trades smoothly, making it a more reliable and stable investment vehicle. Additionally, ETFs with large market capitalization typically track well-established financially stable companies or indices. This offers you a combination of lower risk and broad exposure to significant portions of the market, enhancing the ETF's potential for steady long-term growth. In the European context, where markets can vary widely in size and liquidity, choosing ETFs with these characteristics helps ensure more consistent performance and reduces the likelihood of significant price volatility during market fluctuations. My third point is a reputable provider. Choosing a reputable provider for European ETFs is essential because it ensures the reliability, security, and overall quality of your investment. A reputable provider typically has a strong track record of managing funds, adhering to regulatory standards, and providing transparent and accurate information to investors. This reliability is crucial in the European market, where the diversity of regulators across different countries can create complexities in fund management. Established providers are better equipped to navigate these regulations, ensuring that their ETFs remain compliant and that investors' interest, aka your interest, are better protected. Moreover, reputable providers often have better liquidity and larger assets under management, which can contribute to the stability and performance of the ETF. It's also good to know that most of the ETFs you will buy in continental Europe will be established either in Ireland or Luxembourg due to favorable tax conditions. My fourth point is tradability. The biggest mistake you can make with ETF investing is to get investment advice from US YouTube channels and US investment advisors. They're clever guys, but the legal structure is very different here in Europe. So if you watch a video that says XYZ ETF is really great, you should buy this, it's almost 100% that you will not be able to invest into that particular ETF if you live in Europe. Investing in ETFs is a bit different depending on where you live. So in Europe and in the UK, ETFs have to follow special rules since 2018. It's called the UCITS Directive, which stands for Undertakings for Collective Investment in Transferable Securities. For example, if you want to buy an ETF that tracks the 500 largest US companies, it's called an S&P 500 index, you go online, you start searching, then you come across an ETF, it's called SPY, the ticker symbol is SPY. Then you are very happy, log into your brokerage account, try to buy this ETF, and then sadly realize that you cannot do that because this ETF was designed for American and it's not European compliant, so there's no way that you can buy it if you live in Europe. The good news is that if you use specific search sites for Europeans, it can be continental and it can be UK as well, then those ETFs will be only shown to you, which you can actually buy. So if you live in continental Europe, you can use the website called Just ETF, you can use the Moneymoon app, and if you live in the UK, you can use TrustNet as well. Of course, both of my examples fit into the criteria that we just mentioned. The first one, actually is one of my favorite ones, is a big index ETF, the S&P 500 ETF, that's I just mentioned to you a couple of seconds ago. Over the long term, stock markets tends to rise despite short-term volatility. Major indices like the S&P 500 have historically provided strong returns over decades, making these indices attractive for long-term investors. You can choose from different providers, but luckily you will get the same ETF. There will be minor differences, but you will be able to track the 500 largest US companies index with any of these ETFs. I'll put a list into the different providers with different ETFs into the description. You can have a look and decide which one is the best for you. My next choice is the ultra short-term government bond. These ETFs aim to maintain a stable value per share, providing investors with predictable value for their investments. This stability is particularly appealing during periods of market volatility. While the returns on these ETFs are generally modest compared to other investment vehicles, they often offer a higher yield than the traditional savings account, like you would go to a bank and put in the savings account. These ETFs tend to benefit from rising interest rates as the fund can reinvest in new, higher yielding short-term securities. At the moment, you can make a risk-free return with these ETFs with approximately 3% in euros per year. Well, of course, it's not the greatest return, but for you to have a investment vehicle that you put your money, the money sits there, you can withdraw it in any time, I would say it's an okay return. And the specific ETF for this type is the short-term Euro government bond ETF. This ETF buys ultra short-term government bonds in euros, so the maturity is less than 1 year. That is why your chart looks like this, and it also pays you interest every half year, so you can count on some income as well. Let me know in the comments which ETF is your favorite if you have one. Also, don't forget to subscribe. See you next time. Bye.